Hi everyone, welcome to the channel. So today we are going to discuss a few of the investment ideas that will help you create wealth over the longer time, right? So main idea about today's session was to discuss on the ETFs and how we can use them to do the SIP over the long term. And there are few tricks which if you follow it with the discipline you'll be able to beat the returns as well. So whatever returns index gives, you can obviously take 2-3% more on the returns of that. So it's mainly about few rules which we'll discuss in detail, which will help you maximize the returns. So like for example, so what assumptions are you already know about ETFs and you already know how SIP works, and based on that we will start this session. So before that, a disclaimer that this video is only for educational purpose, and if you are taking any investment decisions, do take the advice from your investment consultant, right? So that's the standard disclaimer. And what we will be, uh, w- I mean, we'll discuss today about the ETFs and what all ETFs. So these are few examples of the ETFs that we have got from the list of multiple ETFs that we have in the market, and these are few of them. We will discuss them, and then we will discuss the rules about how to maximize the returns and all, right? So ETFs are exchange traded fund, which are like for example, we have Nifty as an index, right? So whatever stocks are there in Nifty, whoever is creating the ETF, they'll invest in all those stocks based on the proportion, right? And whenever there is a changes in the index or anything, they'll try to replicate that in the ETF. So that's the basic concept. Like for example, Nifty Bees is one of the ETF which is offered by Nippon, and what they do is they just replicate the Nifty 50. That's it. And whatever dividend we get, those are reinvested. Whatever returns we get on the index, those are there. So Nifty Bees is one of the example. Similarly, what we have is for mid cap 100, we have MOM 100, which is maintained by Motilal Oswal. ITBs is for IT, junior Bs is for Nifty Next 50. Then MON is for Nasdaq Index, Auto, Pharma, Infra, Gold, and Consume Bs. So these are few examples of the Bs. So whatever ETF you like, you can start SIP in that, and we will help you in how to maximize the returns based on that, right? So uh, yeah, so today what we will discuss is one is how to create SIP on Zerodha and how to do it systematically. That's one thing. And how do we maximize the returns by following few tricks like how to fine tune the SIP so that we get the maximum returns. So that's about it. So let's jump into that, and I'll show you the rules as well on a high level. So you can continue with your SIP on specific date. So if you have any date specific in your mind on which you want to invest based on your salary credited, or whenever you manage to get some money, you can based on that periodically you can start on a specific date of any month. So that is one, the first rule, and that should not, I mean, you should not break that SIP irrespective of whatever may be the reason. You should keep continuing the SIP on specific date, right? Second one is SIP when the index is down by 1.5 or more percent, right? So that's the one thing we follow. Whenever we see that index on daily basis, whenever there is a index has been cracked by 1.5 or more percent, we do the same amount of SIP in the whatever SIP we have, right? So this applies for, like for example, if you are mainly investing in Nifty, which is low risk, then junior Bs is moderately risked. Mid caps and small caps are high risk. So based on that, and if you are interested in any of the other indices like auto, pharma, infra. You can individually track those indices. Like I'll show you one example. So these are the list of indices I have maintained in my Zerodha account. So here Nifty 50 is there, Nifty Next 50 is there, IT, mid cap, small cap, right? So if you are investing in Nifty 50, uh, that means you're investing in Nifty Bs, right? So what you need to do is you need to check the index on daily basis, or you can have some kind of alert being maintained where you'll get an alert whenever there is a daily fall of 1.5% or more. So this again is customizable based on your preference. You can modify that. You may go for 1% fall, 1.5% or 2% of fall. I We usually go for this 1.5. So here you can see uh, inside this bracket you can see the returns on daily basis. So here you can see the index was down by 1.72%, right? So this actually triggers that we need to do the SIP. Whatever is the amount we are doing already on monthly basis, we can add the amount here. Then again, wherever else you see this kind of fall, you can go for that. This is 1.1, this is 1.5, right? So this again classifies for that 1.5% break. So you can have that as a rule that whenever there is an index in whichever index you're investing in is down by 1.5% or more, you can do the same amount of SIP. And the third is SIP when weekly or monthly RSI of index is below 40. So what I mean by that is, again, we'll take the same example of Nifty 50. So here I have the chart of Nifty 50 open on weekly basis. So what we usually do is we'll put the RSI of 14, and in that we'll have this set as 60 and 40. So RSI is been set as, so by default it will be 80-20, but instead of that you can go for 60 and 40, right? And whenever there is a index which is trading below 40 of RSI, like for example here you can see the number, and this was the first occasion where it was close to 40, right? So here you can see here it took the support and then bounced back. So this is one of the key area where you can do the SIP. Then second and third point. So what advantage it gives is, like for example, you can say, see this, that there is a support of 40. So 40 is being acting as support for any index. So that's why whenever you see the index is going or trading below 40 RSI, you'll see a sharp bounce back, right? And this has happened historically as well. You can take out the chart of any index, Nifty 50 or a small cap for that matter, anything. Like recently, Nifty IT was down performing, right? So I'll open the chart of Nifty IT. Here you can see. So this was the area where it was trading continuously below 40 for almost around from April to July. So 3 to 4 months it was trading below. So this was a good area to accumulate ITBs, right? And after that you can see that there was a clear recovery from this. So let's say you started accumulating around this area here, which was below 40, right? Below 40 RSI. So from here you can see the returns what we have got till date. Like if I have to show you the price range, I'll take this median as a entry point or your average of ITBs, right? So from here, see the top, almost around 14% return it has given from, if I have to, from July to till date, July to November, right? So 3 to 4 months, it has given 15% return. So this is how you can maximize your returns by just following simple rules and being disciplined about it. You can maximize your returns. And for that matter, other things as well, if you see whenever there is a index going below 40, you can see the sharp bounce back here as well. In Nifty you can see the latest thing where the latest chart where Nifty was trading below 40. So this one, right? So from 15,500 you can see how much we have gained. So this is 15% and this is 20%. So 20% return in just a matter of how 3 to 4 months, right? So that is quite well. So people do ask that when they whether to go with SIP or lump sum. So what you should do is, I mean, there is no perfect time to enter market. So SIP should go on whatever you have defined, the amount and the time. It should go on, but whenever you have some amount of money, you can wait for such kind of events where the RSI has gone below 40, and during that time you can put your lump sum amount. You can easily reap around 10 to 15% of returns in 1 or 2 months, and then if you want, you can take out the profits and keep the other thing or other amount as is invested. And if you are long-term investor, you don't need to worry about taking out the profits, because indices are always going up, right? So on a higher time frame. So if you are in your 20s or 30s, you can start following these tricks to maximize the returns, and I'm sure it will help you create the wealth, right? So these are the simple three rules I wanted to discuss with you. I hope this helps. I'll take few examples as well on the chart. So this was the first instance. We'll discuss this on Nifty, right? So from here you can calculate the returns. So I'll take this point as the entry, 16,400. From here, see, 10% was the high. So if you are a short-term trader, you could have taken out some amount on the 10% return, and then this continued to fall, right? So this is one approach. The other approach is, if you are not concerned about the market going down after you buy the SIP, uh, nothing to worry about, because market has always gone up. So for example, this was the COVID time. So during the COVID time, if you see, so this was the first instance where your RS has gone below 40, right? So let's say you taken the entry here. This was once in a lifetime event. That's why it is pretty scary, because you took the entry here, and from here the price has gone, let's say 30%, right? So obviously this will have some psychological impact on your trading or investing, but nothing to worry about. This was the one time event, but let's discuss this, like for example this one uh, here. So from here as well you can see. So let's say you took the entry around somewhere around here, 11,000, and from here you can see easily you got the returns of 11% in the matter of 2 months, right? Similarly, let's see if you have taken the entry around this area, right? So here as well you can see I'm taking the upper side because I don't want to show you the false returns. See, 12% in 2 months, right? Similarly here as well, if you see, you can check the charts of Nifty if you're a Nifty investor, and you can see this, that Nifty has always gone up whatever is the fall or whatever was the bad news, and even after that it has continued to go up, right? So that's what I found out, that every time we touch the 40 on weekly RSI, that is a good opportunity to enter the Nifty Bs ETFs, right? And from here you get easy returns over the long term, right? So so how many instances we have seen? See, so these two instances or three instances from where we have got 10% return. Then this was the one time thing, so we are ignoring this COVID one. Every other time, whenever Nifty has gone to 40, the returns are 10 to 15% or even 20%, right? So we'll take this example as well. So first time when it entered 40, so let's say this was the first time, right? Or or let's take this example. This is the worst case. So from here, how much time it took to give you the returns? So this was the candle where we got 40. So here you did not get, you just got 7% return, and you had to wait. See, from June, you had to wait till next year. So 1 year. So if you are a short-term trader, this will not work always for you. But if you are an investor who is investing for long term, you'll always get good returns on Nifty. So this was the worst case because here we touched 40, and after that we did not go up. I mean, we are continuously following this channel, right? Until we broke. See, so until we broke out this channel, we were in this this falling wedge, and from here 2015 to 16, for 1 year you did not get any return. But if you are an investor, long-term investor, you got the returns of 10% here, and from here you could see how far the index has gone, right? So this was only 8,000, and now you're seeing Nifty at around 18,000, right? So these are the returns over long term that will always be there if you follow simple rules, right? So we have been following this system from 2017, and the results are very good. That's why I thought I'll share all this information with you guys. And even you can do your own research, and if you're really convinced that this gives the result, then only you can start following this system. Otherwise, you can, I mean, obviously ignore this if this doesn't work for you. So these are the few things we wanted to discuss and guide you through on the investment part. So if you really like this video, like, comment, and share this video with all your friends and community, and do subscribe for more such videos as well. Thank you. Thanks a lot.